Alright guys, welcome back. So in this video I'm going to address a question that I got from a trader, and he said it was posted on the mitigation video, and he said so it's basically the same as support and resistance. Now I can see why you would think that, right? Because obviously let's draw out some mitigation as I explained in that video, right? So we'd have a break above, liquidity generation, right? A run of that liquidity, okay, a pull back up, and then a tap down into that order block, right, mitigating that order block. So effectively he's seeing this as a break and a retest of structure. And although that wouldn't be, you know, it's not necessarily wrong, right? Because, you know, you could identify this as a level of structure. Let's look at it on the charts as well. Something like this here, right? That can be seen as a level of structure, right? Again, a similar situation here. Okay, we had a run of this liquidity, sell down, move above. You can see, you know, that can be looked at as a level of structure, right? So to say that, you know, the levels of mitigation are like support and resistance, I wouldn't go as far as saying it was necessarily wrong, because then, you know, how are you defining support and resistance, right? How are you defining mitigation? So it all depends on how you're viewing it, right? As long as you're following them rules, it doesn't matter what you call it, right? So as long as you're identifying that, it doesn't really matter what you call it. However, what I would say is that every support line or every resistance line isn't going to be mitigation, right? So I wouldn't advise you to confuse the two, okay? They are different, right? Even though this, you know, technically you can look at this as a level of support, right? And if we was looking at it on the other side, right, you know, a break above, okay, you could technically look at this as a level of resistance. So, you know, I wouldn't confuse the two, because, you know, there's going to be levels of support and resistance that are not mitigation levels, okay? So for instance, right, let's take a look. Let's find an even handled number, right? So we've got 150, where are we? 157 flat, right? If we take a look along this line, okay, look, we've got resistance, support, resistance, right? Resistance there, support there, sorry, resistance, support, right? You know, like they're not all mitigation levels, okay? So even though it can be seen that, you know, the area of mitigation can be seen as a level of quote unquote support and resistance, right? I wouldn't necessarily confuse the two, okay? In theory, yes, right, there's support here, okay? So if you want to look at it like that, then fine, right? In theory, there is resistance here, right? So if you want to look at it like that, fine. You know, at the end of the day, it doesn't matter what you call anything in trading, right? You can call this whatever you want, you know, it doesn't matter. The important thing is that you know what you're looking at, you know why you're looking at it, or even, to be honest with you, it doesn't even matter if you know why you're looking at it. The most important thing is that you know what you're looking for, you can clearly identify it, and you can, you know, repeatedly identify it consistently and execute, right? So the other thing you've got to consider, right, is what is actually causing the support and the resistance, right? It's buying at certain points, okay, and selling at certain points, right? And that is all going to be, or, you know, 99% going to be controlled by the banks, okay, and large institutions, right? And a lot of the time that is going to be in the form of liquidity generation, mitigation, filling in imbalances and things like that, right? So again here, look, you can see an imbalance, but it creates a level of, you know, support, right, as most people are going to see it, okay? The same with a level like this, you know, liquidity generation and probably some mitigation under these lows. If we was to drop down on a lower time frame and take a look here, we probably had some liquidity generation, a sweep of that, right, and some mitigation, and that is now going to create what most people are going to see as support, okay? So, you know, you can view it as the same thing, right? Well, you know, I wouldn't view it as the same thing, but after certain moves happen, like, you know, mitigation levels, sweeps of liquidity generations, fills of imbalances, it's going to create these perceived levels of support and resistance, right? And the thing is, like, mitigation can come in all different forms. Again, like here, right? Mitigation, sell off. Okay, you know, you can see this as resistance, right? You know, it is technically resistance. Okay, try pushing up, no, got slapped back down, right? Same here, right? Bang, slap, you know, pushed up. Okay, similar thing here, right? You know, you can see this is a level of resistance. Really, you know, we know that it's liquidity generation, right? Liquidity generation from both sides, and you know, mitigation, right? From both sides. Okay, liquidity generation, right? Mitigation. Okay, so you know, you can see it as it, you know, after it forms, you're going to see it as a level of support, right? And just a little afterthought whilst editing this video, right? I know that there is a lot of controversy around support and resistance trading and institutional trading, right? And people saying support and resistance doesn't work. I just want you to know, right, whoever's listening to this, wherever you are in your trading journey, that it doesn't matter how you trade, you know, you can fail at it. Right, and it doesn't matter how you trade, you can be successful at it, right? If you trade support and resistance and you've got solid rules that you've tested, you've verified, right, and you know you've tested to be profitable, don't listen to people that say it doesn't work, right? 9 times out of 10, these people are going to be jumping around from system to system. They're going to try, you know, they're going to take some random strategy that someone had on the internet, and they're going to test it. And most of the time people don't even do that. They're just listening to other people, following other people. They've heard someone say it doesn't work, they'll say it doesn't work, right? So, you know, just do your own due diligence, test. It doesn't matter how you trade, you know, it's all a process, right? And the most important thing, no matter how you trade, is that you test what you're doing, you're consistent with what you're doing, and then you'll have consistent results. The approach you take to trading isn't the most important part, right? No matter how people may perceive it to be. So I hope you got value from the video. If you did, be sure to hit the like button and subscribe to the channel, and wherever you are on your trading journey, I hope you have a good week, and I'll see you on the next one.